So last week we talked about how retail is faring during all of these shutdowns and closures, but with over 30 million Americans filing unemployment claims since the middle of March, the residential sector of real estate, specifically multifamily, is definitely not immune to everything that's going on with our economy right now. So with so many job losses that directly affect incomes and subsequently the ability to pay rent for many apartment occupiers, how did multifamily owners fare in April and what might happen in the coming months? That's what we'll talk about in this video. Hey, this is Justin from BreakingTheCRE.com, and if you're new here on this channel, we talk about real estate investing careers and real estate financial analysis. So if you're looking to break into the industry or do your first deal, make sure to subscribe and hit the notification bell. So whether you're working in multifamily right now, considering investing in multifamily, or you currently own multifamily properties, you're probably wondering how multifamily is faring today and whether or not apartment landlords are in trouble going forward. Well, the answer to that right now is that in April, multifamily owners got much better news than many expected. The National Multifamily Housing Council, or NMHC, tracks rent payments on a weekly basis in their NMHC Rent Payment Tracker. And this tracks the percentage of renter households living in professionally managed apartments that paid all or some of their rent payments for the month. And the survey includes a huge sample size with 11.5 million units included. And the data for April in NMHC's Rent Payment Tracker spelled good news for multifamily owners, with 91.5% of renters paying all or some of their rent in the month of April. This is down from the numbers 1 year ago in April of 2019, but only down about 4 percentage points from 95.6%, and only down about 3 percentage points from 94.6% of renters paying full or partial payments in March of 2020, just 1 month prior. However, within these numbers, the NMHC does break these payments down on a weekly basis, and that's where things start to get interesting. So while the monthly numbers don't vary widely as a whole, the timeline of these payments was starting to vary significantly in April. So 1 year ago in April of 2019, 82.1% of renters had paid their rent by the 5th of the month. And in March of 2020, just 1 month earlier, 81.2% of renters had paid their rent by the 5th of the month. But when you look at the April data, you start to see a little bit of a different picture. So in April of 2020, if you look at the payments by the 5th of the month, only 69.2% of renters had paid their rent by April 5th. Now, April 5th fell on a Sunday this year, and the NMHC speculated that that could have been part of the variation in the data. Many apartment owners also started waiving late fees in April, easing the sense of urgency that many apartment renters have to pay their rent in full by the 1st of the month. Many apartment owners are also waiving credit card usage fees right now to allow their renters to pay with credit cards. And according to the multifamily technology firm Zego, renters are definitely taking advantage of this, with credit card usage for lease payments up 30% in April 2020 from the same time in 2019. And again, this data picks a huge sample size with 12 million units being surveyed. Now, as the monthly data shows, many apartment renters did catch up by the end of the month, but part of the reason behind that could have been from stimulus checks. So many renters received a stimulus check of $1,200 per individual and $500 per qualifying child, which could cover all or some of rent payments for many apartment owners in the US. So with all of that said and April behind us, what does this mean for May and going forward? Well, according to software company Grace Hill, which also surveys the multifamily industry, only 52% of renters surveyed said they would be able to pay rent in full in May, compared to 69% of renters who said they paid rent in full in April. The survey also found that 40% of residents were planning to ask their landlords to defer rent in May, up from just 20% in April. Now, as shutdowns and closures continue to go on for longer periods of time, it's not surprising that many renters are going to be in more and more trouble. According to a 2019 study by the US Federal Reserve, 49% of US renters couldn't pay for a $400 emergency if one came up. And according to the most recent survey of consumer finances done in 2016 by the Federal Reserve, the average rental household had $13,200 in consumer debt, not leaving much wiggle room for rent payments if a job loss occurred. All of this could spell trouble for multifamily landlords in May and through the summer unless someone steps in, and surprise, surprise, the federal government is thinking of doing just that. This week, it was announced that Ohio Senator Sherrod Brown is planning to introduce the Emergency Rental Assistance and Rental Market Stabilization Act, which would be a $100 billion measure to help people who are affected by job loss for potentially as long as a 2-year period. With the way this bill is currently structured, this would also be grant money, meaning that these renters would not have to pay back the rental payment help they received. And if this passes, this could be a huge relief for apartment renters and apartment owners, but the bill is still in its beginning stages, and we don't know when these payments would happen and if these payments will happen at all. So with the April data behind us and May projections upon us, what can multifamily investors or multifamily real estate professionals take away from everything that has been going on right now? Well, number one is that if distressed deals are coming, they're not here yet, but they might be here soon. With overall rent collections within about 5% of last year's benchmark, most multifamily operators aren't in a world of hurt right now, but that could change as more time passes and job losses become more permanent. In a recent report by CBRE, they expected the multifamily market to bottom out in the third quarter of 2020, and we'll start seeing some sort of a recovery in the fourth quarter of 2020, meaning that it's likely we'll be waiting until later this summer to see any distress from multifamily owners, if we will see it at all. At that time, CBRE expects apartment vacancy to jump up to 6.3% in the third quarter of 2020, up from just 3.6% in the third quarter of 2019. They also projected average rental rates to drop across the country by 6.7% from Q3 2019 to Q3 2020, dropping from an average of $1,717 per month in the third quarter of 2019 down to just $1,603 per month in the third quarter of 2020. CBRE also mentioned that this doesn't include any sort of credit loss or non-payment of rent from tenants, and with many tenants unable to pay base rent, even with lower rental rates, and evictions being outlawed for many apartment owners across the country, this rent decrease and vacancy increase might not show the extent of the entire picture. All of that is to say that overall, there's not too much distress in the multifamily industry today, but if you are going to see deals, they likely won't be coming until later this summer at the earliest. Now, the second takeaway here is that despite all of the economic turmoil right now, for investors that are looking to invest in a real estate asset long term, multifamily still has excellent supply and demand fundamentals. And in most markets right now, housing prices have yet to fall and are being propped up by low interest rates and lack of supply in many US markets. And unless housing prices drop materially, renting is still going to be a more cost-effective option for many Americans that need a place to live. Lending standards also tightened recently with higher required down payments, credit scores, and increased employment verification needs, and this is going to make it even more difficult for would-be homeowners to qualify for a loan, shrinking the buyer pool even more over the next 12 to 18 months. And if you pair that with an increased difficulty in building new multifamily product right now, with construction delays and cancellations, supply and demand fundamentals are still likely to be strong even if job losses continue to occur. And if you look at the data, even from the first quarter of 2020, you can see that demand was still outpacing supply in many US markets, and with supply not increasing at the levels expected this year, there's a very good chance that this could continue in 2020 and 2021. This is good news for rent increases and value increases if you are a long-term investor and plan to buy and hold for the long term and don't mind some value turbulence along the way. And finally, the last takeaway here is that even though multifamily isn't seeing the same magnitude of a shift as a product type like retail, utilizing new technologies is going to be more important than ever than leasing units and making sure your units are commanding top of market rents. Things like virtual tours and e-payment platforms, which were already making their way into the industry before, are now going to become commonplace and really expected by renters of multifamily units. And part of an operational value add opportunity outside of any sort of renovation for a multifamily investor could just be something as simple as introducing an e-payment system or offering virtual tours to residents, as the psychological effects of everything that's going on right now will probably last for the next 1 to 2 years or more. Higher cleaning and sanitation standards will also come into play here, making that operational excellence even more important within an already operationally heavy product type. So with all of that said, if you're looking to break into the multifamily industry as a real estate professional, or you're looking to make an investment in multifamily in the next 12 to 24 months, the waters might be a little bit choppy throughout the rest of 2020. Transaction activity has dropped significantly as many investors are taking a wait and see approach to see what happens with rent collections in May and to see what happens with values as we head into the summer months. But for investors and real estate professionals that are focused on the long term, multifamily still has very strong long-term supply and demand fundamentals regardless of what happens within the economy over the next 12 to 18 months. So that's a lot of data, but I hope that was helpful for you in trying to understand everything that's going on in the multifamily space right now and what might happen going forward. Now, if you're looking to invest in multifamily in 2020, or you're looking to break into private equity real estate or multifamily brokerage in 2020, I have a course that might be really helpful for you, especially right now when you might be stuck at home. And the course is called The Complete Guide to Multifamily Real Estate Investing, which really walks through multifamily real estate investment analysis and the things you should be looking for when you're analyzing multifamily deals, which is really going to come in handy if you're looking to take advantage of any sort of opportunities that might come up in the third quarter of this year. And if you want to learn how to build models from scratch for your own multifamily analysis, make sure to check out Break Into CRE Academy, which will give you access to all Break Into CRE courses, all Break Into CRE models, and some additional one-on-one support, and I'll link both in the description below. So if you like this video and want to see more content like this, let me know in the comments below and make sure to hit the like button. If you want to see more videos like this as well, make sure to subscribe and hit the notification bell. I put out new videos every Thursday, so if you hit that bell, you'll know every time I release a new video. Thanks so much for watching again. I hope this was helpful, and I'll see you in the next video.